Good morning, you're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our top story. Moody's Analytics sees the Philippines as a laggard in the entire Asia-Pacific region in terms of economic recovery. Moody's Analytics Asia-Pacific Chief Economist Stephen Cochrane said this is due to a surge in COVID-19 cases that prompted the reimposition of the stricter lockdowns. Cochrane also took note of what he described as a severe shortage of vaccines. He said the Philippines may see strong growth rate this year, but primarily due to a low base effect as the economy contracted by 9.6% in 2020. However, he noted that the country as well as India are at great risk of underperforming this year. Moody's Analytics sees the Philippine economy to grow by 6.3% this year, while economic managers are reviewing their growth projection of 6.5% to 7.5%. The bleak outlook for the Philippines is in contrast with the improving forecast for the region. Cochrane said the global economy is now accelerating due to a stimulative fiscal policy and the pace of vaccination. Speaking of the vaccine drive, vaccine czar Carlito Galvez said the country expects the delivery of up to 14 million doses in the second quarter. Galvez said the delivery of 1.5 million Sinovac doses procured by the government will be completed this month. Sinovac has shipped 500,000 doses last on April 11th. He also said that there is a possibility that AstraZeneca vaccines from the COVAX facility will also arrive this month. Okay, guys, quick peek at the offshore equities. You can see on my terminal here, Wall Street slipping yesterday, especially the NASDAQ. That's as the Tesla led the declines after concerns about a fatal crash of one of its electric vehicles, which appeared to actually have no driver. But you can see that this slide comes, of course, after the US indices come from all-time peaks. And Asia seems to be as well opening in the back foot. You can see the stocks following Wall Street's declines there. The Nikkei 225 down by a hefty 1 9/10% this morning. Still some bright spots here. The Kospi, for instance, up by 0.4%. Now, what about our own bourse? We seem to be going the opposite direction, which has been the case as of late. Now, recall that yesterday we were already down, and it seems to be picking up this morning. Regina Cap says that yesterday's slide was due to the fact that investors are starting to pile up stocks in the U.S. following the U.S.'s releasing of strong earnings from the blue chips and also their sound economic data. We are still, however, hovering just up by 0.01%. Nevertheless, yesterday, net foreign selling persisting for the 12th straight day. We lost 511 million pesos from our foreign investors. Is it time to be tapping into the offshore bond markets? So that is what the Philippine government seems to want to do as they prepare their Euro bond issuance. They're returning to the global debt market a second time this year, with potential tenors of 4, 12, and 20 years for those Euro bonds, expected to be rated Baa2 by Moody's, BBB by Fitch, and BBB Plus by S&P. Now, they've already tapped BNP Paribas, Credit Suisse, Goldman Sachs, JP Morgan, Nomura, and StanChart as the joint lead managers and book runners, but we have no specific details on that yet. Now, recall that this follows the Philippines raising 24.2 billion pesos from the Samurai bond sale that we just led on March 30th. Now, this, according to Finance Secretary Sonny Dominguez, he had earlier mentioned that the country would be tapping the U.S. bond market soon before the interest rates over there skyrocket. Now, recall that the Treasury plans to raise 3 trillion pesos this year to plug the fiscal deficit. They've also said that 286 billion pesos will be coming from global bond issuance. And finally, just a quick peek on the mining counter this morning. Of course, that has been in focus as of late. Now, this recent strand from Environment Undersecretary Jonas Leones, the government will not be backing down on lifting that mining ban. He said, hindi natin pinagtutuunan ng pansin ang ganyan dahil marami tayong problema ngayon sa ating bansa. Kailangan natin ng pagkukuhanan ng pondo at ito ang isa sa mga paraan para tayo ay makaahon. So he mentions that we do need the funds. Recall that they have said that they're looking at over $4 billion in capex with over 40 billion pesos in LGU taxes. Plus, recall that we had the Chamber of Mines yesterday on our show, yesterday afternoon, saying that that would actually generate 40,000 jobs. The mining counter up by 0.3% in early trade. Checking in on other headlines, we're keeping our eyes on President Duterte says he understands the concerns of senators seeking for the revocation of the executive order on lower pork tariffs. But during his public address last night, Duterte said the EO is only a temporary measure and can be withdrawn once pork prices stabilize. However, in the same event, Agriculture Secretary William Dar insists that the policy will not kill the local hog industry. Instead, Dar believes that the EO 128 only serves to augment the country's demand for pork products. The secretary also announced that African swine fever cases in the country have been declining. But he admitted that to fully revive the domestic hog industry, the department needs an additional funding of 7 billion pesos. The country has lost more than 83 billion pesos in income following the imposition of stricter quarantine classifications in the NCR Plus bubble. Acting NEDA Chief Carl Chua explained that for every week under ECQ, the country was losing 20 billion pesos, while the amount was 15 billion pesos for every week of Modified Enhanced Community Quarantine, or MECQ. Despite this, Chua said 9.3 million jobs were generated in February, but unemployment still rose to 8.8% in February compared to the 8.7% in January. The agency targets to lower the jobless rate to 4 to 5% by next year. The downgrades keep pouring in, but the vaccines bottleneck may finally be relieved. What to expect in the coming months? Here to share his latest views, we have with us Mike Ricafort, Chief Economist of RCBC. Good morning, Sir Mike, and welcome back.
Hi, good morning, Danie, and to your viewers. Nice to be back.
Sir, worst in the region, that's exactly what Moody's Analytics has now called the Philippines. Is this the reality we must now accept, or are you still optimistic that we can get through this?
If you look at the consensus estimates by the multilaterals and the credit rating agencies for Philippine GDP, so it's a growth of at least 6 to 7% this year, and that's still, and also for next year during the election year. So, however, for a year after the elections by 2023, the consensus still points to a GDP growth of at least 6%. So, if you're taking that perspective, so it may be kind of, well, of course, it may reflect the assessment on the new COVID-19 cases, because it's relatively higher here in the Philippines compared to other Asian countries. Maybe in that context. But if you look at other macroeconomic data, so it looks like the GDP growth estimates for the Philippines, if you look at the consensus, it's still relatively among the highest in the region. But for this year, of course, we're coming from a negative base, from minus 9.6%. So definitely, we have to expect growth. Well, now we're estimating it at least 5%. After incorporating the impact of the ECQ and MECQ on economic growth.
Okay, sir. So your revised forecast is slightly lower than that of the government. Sir, how much have you taken into account already the vaccine rollout with this 5% growth? What are you expecting here? Has it been better than expected, or are you expecting delays? And are you seeing that the impact on economic growth might have a lag?
Yeah, it was the GDP forecast of 5%. That's a reduction of about 1 percentage point from the previous estimate of at least 6 to 7. So now we're looking at it at 5 to 6%. That's still considered decent. And we have to note that the multilaterals and the credit rating agencies they're still optimistic also on their much more optimistic on their growth estimates. Now that already incorporates the effects of MECQ till the end of the month. Of course, it would be a function of new COVID-19 cases, because so far, despite the 2-week ECQ and now so far more than a week of MECQ, new COVID-19 cases remained close to 10,000 per day. So hopefully, let's see in the coming days if these hard lockdowns would result to meaningful reduction or in the new cases. And that's also a function through on the vaccine arrivals. We have seen it for April to May. We have seen some delays. It was reduced by more than half compared to the earlier estimates as disclosed. Uh, but hopefully, uh, for understandable reasons, because of the tight global supply for vaccines, as well as, of course, we have seen acceleration of vaccinations in developed countries like the U.S., in Europe, and in other developed countries. So hopefully, once they're done with their aggressive mass vaccination, so hopefully by the third quarter or fourth quarter, there will be increased arrivals and rollouts of vaccines here in the Philippines. And now, at least we're seeing the A4 priority group or some of the economic frontliners already being included in the list of the priority for the vaccination program. So that's going to help recovery prospects for the various businesses and industries. You have more inoculated or vaccinated people working for those industries. So that's going to indeed help boost confidence. So we're anticipating that. We have already seen uh, at least the brunt of the lockdowns. Okay, there may be some possible extensions. It's a function of the new cases in the coming, especially for the coming week. You'll
Sir,
decide. Yeah.
when you look at the global recovery, can you say that that's simply because of the vaccine rollout, and that if we continue on at this better pace, we will be joining that global recovery, or can you say that that has been because of a function of maybe fiscal stimulus or other policies that the government has put in place?
Yeah, that's very true, Danny. You're looking at it on a multi-perspective standpoint. Yeah, well, the vaccination would indeed play a significant role because now the delay it partly shows the new variants and the delay in the arrivals. It may have led to relatively higher new cases locally. Hopefully, we've seen that in other countries like in the US. We have seen a significant reduction as they already reached their target of 200 million doses, and that's doubled the previous estimate of 100 million for the first 100 days of Joe Biden. We've seen a sharp reduction in new COVID-19 cases, and the economic data very strong in the US. We have seen US creating almost a million jobs in March. The services sector there grew to the fastest since records started in 1997. The manufacturing data in the US is the strongest since 1983, and the initial jobless claims already among the best levels in 14 months, even in early March. So it does show that increased vaccination would help improve economic recovery prospects. That's one. And secondly, we have the CREATE bill. It's now the CREATE law, rather. For every year, that's estimated to contribute about zero point 0.5 to 1 percentage point of GDP. That's a very important offsetting factor. That's why that is incorporated in our forecast. That's going to add whatever drag that there may be from ECQ, MECQ, at NCR Plus. That would be effectively offset by CREATE law because the reduction in corporate income taxes would be retroactive July 1, 2020. And on top of that, there's greater certainty on investment incentives that's going to help attract and generate more local and
More
foreign
jobs.
investment. So,
Sir,
and
sir, just a last question, sir, on the fiscal deficit plugs that the government is looking at. So they are actually cutting the pork tariffs to, arrest the inflation coming from the supply side. But at the same time, that's also going to result in foregone revenues for the government from taxation. And then they are, lifting the mining ban at the potential expense of the environment, also for taxation purposes, and then they are tapping into more debt. Does this make sense to you in terms of plugging the fiscal deficit?
Yeah, as long as, well, at least this is a good signaling of some sorts, Danny, because after 9 years, new mining investments are again allowed. And it really comes at least the timing is rather favorable in the sense that if you look at the results of some of the mining companies here in the Philippines, we have seen some outperformance, especially some of the nickel producers, because those who would benefit, the miners that would benefit most especially those that are in the supply chain of electric vehicles like nickel, as well as renewable power like copper, among other inputs from the mining industry. So it shows also with the prices are also relatively high. We have seen almost a decade high for some of the prices as a result of that. So there has been a boom in the prices of some metallic mineral, both especially metallic, some of the metallic mineral products, no, as a result of that, no, the increase, the increased demand for more renewable power sources as well as for electric vehicles. So that would be key. Yeah, definitely that's going to help for as long as it's aligned with global best practices in
Mm-hmm.
mining, sustainable mining that would also be supportive of well, at least in terms of the impact on the environment, if it's much more manageable. So
Mm-hmm.
that would help generate more investments going forward, and in turn, more job opportunities. And that's a good signaling because this is on top of the other key reform measures be on the lineup, like on various foreign investments, allowing more and encouraging more foreign investments to come in. So that would complement the create law, because the create would also help attract more foreign direct investments in the sense that we would lower corporate income taxes. So that's
So
all consistent.
favorable, sir. So favorable timing, as you mentioned, in terms of the acceleration of structural reforms here, still a bright spot in terms of the government policies. Thank you so much, sir, Mike Ricafort, Chief Economist of RCBC, for your time and insights this morning.
Thank you so much, Danny, and to your viewers. And stay safe.
And that's a first look into the business day. Today is Tuesday, April 20th, 2021. Catch Business World Live for the market close at 3:15 p.m. Today, I'm Danie Laurel. Mask on, wash hands, and stay safe. Philippines, we are One News.